Hello, welcome to my channel.
So here from the given data we have to calculate value of output and GDP at factor cost. Value of output. What is value of output? Value of output is equal to sales plus change in stock. Value of output is equal to sales plus change in stock. First we have to check whether these terms are, the values of these are given directly. Here sales given 1000 crore, change in stock given 200 crore. So sales is equal to domestic sale plus export. You can see that sales given, export given. Sales already includes domestic sale and export. So there is no need to take export here. Because sales, that term is given. Its value is given together. Instead of sales, if here domestic sales is given, we have to add export. But as sales is given, we can very easily calculate value of output. That is 1000 is the value of sales plus 200 is the value of change in stock. Instead of change in stock, if closing stock and opening stock is given, closing stock minus opening stock, we will get change in stock. So sales plus change in stock, that is 1200 rupees, 1200 crores is the value of output. That is over, simple. Always write in the units, rupees 1000 crore. Now we have to calculate GDP at factor cost. How can we calculate GDP at factor cost? It is otherwise, in value added method we call it gross value added at factor cost. Okay, GDP at factor cost. In value added method we say gross value added at factor cost. How can we calculate? We know that gross value added at market price is equal to sales plus change in stock minus intermediate consumption. We will get gross value added at market price. From that we have to deduct net indirect tax in order to arrive at factor cost. Because we know we have to find out the factor cost concept. It does not include net indirect tax. Okay, so next we are going to calculate gross value added at factor cost. I will write here. Here itself. Gross value added at factor cost or GDP at factor cost. It is equal to sales plus change in stock minus intermediate consumption. While we do sales plus change in stock minus intermediate consumption, we will get gross value added at market price, which includes net indirect tax. Minus net indirect tax, we will get GDP at factor cost or gross value added at factor cost. Okay, so GDP at market price or gross value added at market price is equal to sales plus change in stock minus intermediate consumption. From that, we have to deduct the value of net indirect tax. We will get it at factor cost. Now we have to just enter the value. We already know what is the value of sales plus change in stock. or value of output minus intermediate consumption minus net. So 1200 GDP at factor cost is equal to sales plus change in stock, otherwise called, it is called sales plus change in stock is value of output, 1200 minus intermediate consumption, that is purchases. So we have to check whether the term domestic purchase and import is given, because purchase means or intermediate consumption can be given as purchase. So purchase means it includes domestic purchase and the imports. If it is given purchase from firm A, that means the domestic purchase. Purchase from within the country or domestic purchase, then we have to include imports also. But here the term purchase is given. Imports is not given. That means it includes imports. So sales plus change in stock minus intermediate consumption minus net indirect tax. So 1200 is the sales plus change in stock value minus intermediate consumption, that is 500. Intermediate consumption is 500. Sales plus change in stock 1200 minus intermediate consumption 500 minus net indirect tax. How can we calculate net indirect tax? Indirect tax minus subsidy. So first we will check whether net indirect tax is given together. That means net indirect tax value is given or not. That we have to check. But that term you cannot see here. Instead, its components are given. So net indirect tax is equal to indirect tax minus subsidy. What are the examples of indirect tax? GST, goods and service tax. So sales tax, it is given. Then excise duty. All these are examples of indirect tax. So sales tax given, excise duty given. So we have to add it in order to get indirect tax. Subsidy is not given. So how can we write it? Net indirect tax is equal to indirect tax minus subsidy, sales tax plus excise duty. That is 70 plus 50. 120 is the indirect tax.
The answer is rupees 580 crores. Sorry for the technical error. Thank you.